Credit score is important for various reasons of your financial health. In today's video, we're going to look at tips and strategies which would help you to increase your credit score easier and faster. What is a credit score? A credit score is a three-digit number that rates your credit worthiness. Credit scores range from 300 to 850. The higher the score, the most likely you are to get approved for loans and for better rates. A credit score is based on your credit history, which includes information like the number of accounts, total level of credit, repayment history, and other factors. Lenders use credit scores to evaluate your credit worthiness or the likelihood that you will repay loans in a timely manner. There are three major credit bureaus in the US, namely the Equifax, Experian, and TransUnion. These three companies dominate the market for collecting, analyzing, and dispersing the information about consumers in the credit markets. So why is the credit score important? Credit is an important financial indicator that shows lenders your ability to repay debts. It will come to play when applying for things like credit cards, mortgages, auto loans, and more. Improving your credit score can help you qualify for better interest rates and loan terms. What is a good credit score? Each credit model uses different factors to assess your credit. A good credit score can vary depending on the model. FICO categorizes good scores as falling between 670 and 739, while Vantage scores good scores range from 661 to 780. But typical scores can be better than good. The most popular FICO and Vantage score credit scores range go as high as 850. How long does it take to build a good credit score? Building credit takes time. With patience and determination, you can typically expect to see your first credit score appear somewhere between 3 and 6 months after you open a credit account. Though this will largely depend on the credit scoring model being used to judge your credit, it might take longer to build an excellent credit score. There are plenty of areas where credit can influence people's lives, but if you're trying to build better credit, things may seem a little backward, because you actually need credit to build credit. Understanding some credit basics can help you get started. So here are some ways you can build credit and use it responsibly. You can build credit history whether you have a credit card or not. However you want to do it, it's important to practice responsible credit habits like making payments on time each month. And monitoring changes to your credit score can help you track your progress. Let's look at 7 ways you can build credit scores. The first way is to apply for a credit card. When you apply for credit cards, you are asking for a type of open-ended loan from a lender. As your application is considered, the lender may take into account your credit history by looking at your credit report. If you have a thin credit file, meaning you haven't used credit much yet, they may not be allowed for a lender to consider. And that could make it more difficult to secure access to credit. But some credit cards are designed with this in mind. Here are some common starter cards that, when used responsibly, could help you establish credit for the first time or build credit. Student credit cards are regular credit cards, but for college students and recent graduates. Some student credit cards offer cashback rewards and other perks. Check with your lender for more details about eligibility and benefits. Cards for fair to average credit are for people who began to build their credit but whose scores are not yet where they want them to be. When used responsibly, a good starter card, as these cards are sometimes called, may help you build your credit. And it may even have features like cashback, rewards, or no annual fee. Secure credit cards are a lot like traditional cards with one main difference: they require a deposit. That money acts as a collateral and is usually refundable. Beyond the deposit, secured cards function like traditional cards, and they often look much the same too. But keep in mind that the credit limits on these cards may be lower and they may not have rewards or bonuses. The second way is to become an authorized user. Another way you could consider building credit is to become an authorized user on someone else's credit card account. Authorized users have access to an existing credit card account and might even get their own card, though the primary account holder is responsible for payments. Credit card companies aren't required to report an authorized user's activity to the credit bureaus. But if they do, the credit account along with its payment history will appear on the authorized user's credit report. This means that if the authorized user and the primary account holder are using this card responsibly, both could see a positive impact on their credit. In the same way, any negative actions like missed payments could reflect poorly. You might have heard of the similar option called co-signing. A co-signer is someone, often a family member or friend, who agrees to vouch for someone who's applying for their own card. That includes repaying the debt if the primary borrower can't. But it's worth noting that the major issuers don't typically allow co-signers. The third way is to apply for a special kind of personal loan. As the name suggests, credit building loans, CBLs, are a type of personal loan designed with a different goal in mind from that of traditional loans. And because of that, they work a little differently. Borrowers make payments before getting the money. Credit unions typically offer CBLS according to the Consumer Financial Protection Bureau (CFPB), but they may be available elsewhere too. The loans start with the lender depositing a small amount around $300 to $1,000 into a locked savings account. Borrowers then make small payments over a set period known as a term, which is usually 6 to 24 months. When the term ends and all payments are made, the money is paid out. As payments on a CBL are made, progress is reported to the credit bureaus. That's how a CBL can help you build credit. But it's important to take the payment due date seriously. Late or missed payments could end up hurting your credit score. The fourth way is to make timely payments on other loans and accounts. Your payment history is one of the most significant factors that go into calculating your credit scores. You'll want to ensure you're making timely payments on any existing debt like mortgages, student loans, or car loans. Having a debt like this often means that you have already established a credit history. So you can continue to build your credit by staying current on your loan and reducing debt. Keep in mind that falling behind on payments for secure loans, like car loans or mortgages, can do more than affect your credit. That's because the vehicle or the property is used as a collateral, and if you fall behind on payments on secured loan, you could risk losing the collateral. And don't forget that payment history is one of several factors that affect your credit scores. Your credit mix is another. It's a measure of how you handle different types of loan, including revolving credit and installment loans. The fifth way is to look for ways to add rent or utility payments to your credit reports. Regular bills like those for your cell phone, utilities, and rent often aren't reported to the credit bureaus, so they may not have any impact on your credit even if you have never missed a payment. But there are many ways to have your rent or other bills added to your credit report. For example, Experian, one of the three major credit bureaus along with TransUnion and Equifax, offers a service that can track utility bills and cell phone payments and add them to your credit report. So if you pay those bills on time each month, you may see a boost in your credit score. The sixth way is to build and maintain good credit habits. After you have started building credit, it's still important to practice responsible habits. Here are a few good habits to keep in mind throughout your credit journey. Make payments on time. Payment history can be a significant factor in determining your credit rating. You might consider setting up automatic payments to ensure you don't miss a payment due date. You could also use scheduled emails or calendar alerts to remind yourself. Creating a budget to compare your income to expenses is a key step to reaching your financial goals. Seeing where your money goes each month could help you set aside loan or credit card payments before you start spending each month. Exceed the minimum payments each month, so it can be tempting to keep making only the minimum payments you see on your credit card statement, but ultimately it's counterproductive. Those minimum payments come with a cost, which is interest charges, and interest can add up, costing you more money in the long run and making it harder to pay off debt. Try to stay under your credit limit. Maxing out your credit card's limit could reflect negatively on you and your financial situation. Experts recommend using no more than 30% of the total credit you have available. If you have been using your credit card responsibly, you could consider requesting a credit limit increase. A credit limit increase could help you lower your credit utilization ratio, which is the amount of credit you're using compared to the total amount you have. Be careful with your credit card application. Applying for a bunch of credit at once isn't likely to help you build credit any faster. In fact, it could make your financial situation look worse than it is. That's because credit scoring takes into account your recent activity, and multiple hard inquiries could hurt your score. Monitor your credit scores and reports. Once you start to build credit, it may be a good idea to keep track of where you stand. You can get free copies of your credit reports by visiting annualcreditreport.com. And there is also CreditWise from Capital One. CreditWise is free and easy to use whether you're a Capital One customer or not, and it won't hurt your scores, so you can check it as often as you like. The seventh way is to consider a lending circle. A lending circle is made up of a group of people who agree to lend to each other. Members contribute to a fund on a monthly basis and take turns collecting the pooled funds. Lending circles can be informally structured, like those made up of friends or family members, or they may be organized by non-profits or online lending platforms. But keep in mind, lending circle members build credit only if the organization reports the activity to the credit bureaus, which isn't always the case. Be aware that this type of lending can come with higher fees and higher interest rates than a traditional loan. And if you run into trouble paying back your loan on time, you might not get as much as support as you would from a traditional bank. Let us know your thoughts in the comments, and subscribe to the channel so that you wouldn't miss any of the videos on personal finance and making money online, and you get notified. Thank you for watching. See you next time.